The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good morning, folks. We're going to have Bill Meridian of Cycles Research on at 9:30 this morning to talk to us about some cycle things. We'll start out today with the New York Stock Exchange Index. As you can see from the chart yesterday, we did not make a previous higher high. We're approaching the 61% retracement now of the whole thing. And that is right into the gap area. Now, this is the real market, but unfortunately, it's the S&P and the NASDAQ and the Dow that everybody's looking at. So whether this is right or wrong, this is the basis of what I do is watch the, the broad market. Whether that's right or wrong, I don't know, but we'll see. Netflix went nuts yesterday. Really was a big move in that for the day, so we'll watch what's going to happen here. Now, I wanted to share with you, we did have earnings also in Intel last night, and the market, Intel went totally bonkers to the upside. We'll show you this on a 4-hour chart so you can get an example of what really happened to Intel last night, because of the fact that I think it's trading around 3060 right now. But as you can see, we rallied all the way up to almost the exact 61% retracement from the June high, and then backed off $2 a share in Intel. Now, that doesn't happen with Netflix, because it's a harder, first of all, being expensive stock. It was $700 and it split 7 for 1. It's difficult to get that stock to even short it, because it's not many people have it, and it's borrowed because it's relatively tightly held. We are making a new high in the NASDAQ. I don't think there's anything you can do. Before I do the NASDAQ, I wanted to show you where we are with the DAX index. We've had that big move from the previous high, and we just went above the 61% retracement now of the high from the move that we had way back in April. And so that tells us we're probably going to go a great deal higher. We've got gaps everywhere over this thing, so there's just all kinds of euphoria about this Greek thing that's going on, as there should be. And we do have a breakout, of course, in the NASDAQ, and we're going to find out, where it's going to go here, very, very shortly, as soon as I can find it here on my. There it is. Just give me a second here, and we'll pull it up, and you'll see that we are breaking out here without too much trouble, and we'll see where we are. Give me a second to get the daily up, and then we'll take a look at it. Yeah, there's what we are. This is a 5-point reverse pattern, folks, a 5-point reverse wave on the NASDAQ. But frankly, it'll be a miracle if this thing works, because we've taken out the highs of April, we've taken out the highs of June, we've taken out the highs of July. Now, that's not what the real market is doing, but that's what the NASDAQ is doing. So keep that in mind. We're up 8 days in a row now. This is the new moon. We have that big cycle date that was due to happen on the 14th or 15th, and today's the 16th. Whether that means anything or not also, plays into it a little bit. So I don't really think it will make very much difference, but we'll have to, do one thing at a time, to see what's really happening with these things, because there's a lot of euphoria now that everything is okay in Europe and everything is okay in Greece. So that's a good thing for everybody. That means there's going to be jobs for everyone, and everybody's going to be in hog heaven, as they say in Indiana. Now, we want to take a look here at the euro, because that's the thing that made this market move the most. And I wanted to bring up the chart in the euro, because we are heading lower in the euro. The next step is somewhere once we break below 108.50. we'll most probably be heading down, towards the 106.50 to see if that's going to be the case. And remember, the long-term view here on the weekly charts that we've been talking about for quite some time takes the euro down into the area of 99 to par. And that's what we're looking at. That's what we're looking at here. So we'll see, what's happening, with this market. But I'm really watching the New York Stock Exchange Index today, because if it's really strong and we close above the 61% retracement, and the Nasdaq closes into new high ground above 45, 60 or so, then I'll have to just scream uncle and say this is it. But there's so much euphoria going on in the world that it's a little bit more difficult to put it all together. That's what it looks like to me, but we'll see. This reminds me that today I have nothing to do with Netflix. I have nothing to do with Intel. I hardly trade stocks ever at all. I watch how they react, because Netflix moved the Nasdaq 50 points. The Nasdaq was trading at 45.09, and when Netflix came out with its earnings, it moved 50 points. It just went straight up and didn't stop. And then, of course, the Greek referendum came out and moved a little bit higher from that. But it was mainly Netflix that moved the stock, quite that much. It was a little bit of Google, too. But, these are really high-priced stocks, folks. So you're talking about 15 or 20 stocks in the NASDAQ that are doing all of this. It's not the real market. The real market is that New York Stock Exchange Index. I hate to beat a dead horse, but that's the real market. That's how I view it, and I don't see how it's going to change very much unless I change my mind. And I've been watching it for so long, I don't think that it can. I wanted to share with you, everything is really bullish, right? And everybody's buying stocks like crazy. Well, just take a look what happened to the advanced decline line yesterday. This thing, there was more decliners than advancers yesterday. And now today it's probably going to go up, and whether it's going to be crazy or not, we'll have to wait and see. But the news is everybody's talking about the breakout in the NASDAQ, as they should, and we'll see if that means anything or not. But this is a pretty strong cycle day, in my opinion. I wanted to share something with you from 2007, because this is when I first started working with Tom O'Brien on a daily basis. And I want to bring this up to give you an idea of what happened. This was August the 15th of 2007. That's the day that Skype went out. It was out, and I was always chatting with Tom on Skype. And I'd been a guest on the radio show that day, and the Dow was down 350 points that day. I think it was down around 300 to 350 points with about an hour and a half to go. And the Russell 2000 was up on the day. I mean, I had never seen anything like that. In fact, that's why Tom and I were chatting. And then the next thing was the NASDAQ came back, and it was up on the day with the Dow down about 200 points. And finally, when the Dow finally did rally, the other two went crazy. But what happened here, I told Tom, I said, when we take out that low of August the 15th, we're going to start a terrible bear market. And that August 15th low is similar to the low that we had on March the 13th. And we have broken March 13th, folks. We've broken that to the downside. Now, we've made new highs. We've made new highs in the NASDAQ, just like we did here in 2007. We did go up and make new highs. We probably make new highs in the S&P, possibly. I don't know. Maybe new highs in the Dow. But we did break that March date, and that's just very, very important. So we've got to pay attention to that. These cycles are, they're pretty good. I mean, when you go back and look at these dates, from 1929, 1974, we had two of them in 74, and one in September, one in October, and one in December. I mean, these are monster dates that we're looking at here, and they're mathematically, perfect. So we'll see, how the things, unfold. So anyway, keep in mind that this is what we were looking at here, that we did break that low. And the key today is how well the market handles the New York Stock Exchange Index, which we'll know here, very, very shortly. We've got a lot of bullish enthusiasm going on, pre-market here, so we're most probably going to have a, pretty volatile opening like we usually do. But, we're above the 786 in the futures. The S&P futures came in at 212.50. We've been as high as 215. So those are things that you want to be watching at the same time, and watch that for a very, very close analysis of what's going on in the market. I do want to. I'm only going to be on a short time because Bill Meridian has such great information. I wanted to spend some time here, with the gold and also silver, because they have no friends anymore. They've basically everybody has abandoned the ship, and this is when I like to see to put the toes in the water. But we're not down there yet. We're very, very close. In the gold, I would like to look at it down around 1135, and we've got down to 1141, so far today, and I would like to see whether that happens or not. Now we've got the new moon today, and the moon works pretty well with gold. So whether this will be a little bit of a bounce, I'm not really sure. But we have several things happening here. We've got the cycle, that goes back. It's a an 86-day cycle going way back into November of last year into March, and then March to where we are now. We've got the ABCD structure coming in here at the 1135 level, and we'll see if that's the case. Now silver has not broken the previous lows. The previous lows we had in silver were back at 1160. Let's try it again, Larry, at 1460 per ounce. And so far we've been down to 1485 per ounce, and it's not doing very much, but it's just sort of hanging in there. But today's going to be a real active cycle day, in my opinion, from everybody's perspective, especially the market stuff. This is a big thing, folks. I've been talking about it for a while. Whether it means much or not, we'll have to just wait and see if it's going to mean that much or not. But it does have some powerful stuff involved along with it. Bill's got some really long-term things that look real interesting too, so we'll wait and see. The strategy that that I'm watching is if the New York Stock Exchange Index is really strong and we close above the 61% retracement, which is certainly possible, then that's a big thing. But if we just get up there into that gap and it stops right there, then that's what's really happening with the market. This other stuff is just it's just a smokescreen, and that's what I'm looking at it. I know that we're having some earnings coming out. We had Bank of America, and it jumped yesterday, and some of these others and things. But those earning things, I think they stack the deck on those things anyway. So we'll wait and see. But Netflix went nuts. It's up about 11%, and but the rest of them are just hanging in there, without a whole lot going on in here. So we'll just keep our eye on and what's going on with these things, and we'll right after we get the open of the New York Stock Exchange Index, Bill will be on, but I will talk about that a little bit later. So we're going to take a break here, and then I'll be back to talk a little bit about bonds, and we'll be back in just a few minutes. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and I've posted in the chart of the German Bund, which is equivalent to our 30-year bond. And as you can see, we've rallied up to the 61% retracement yesterday. It's a very, very nice technical picture on this. It follows all of the numbers of the Fibonacci summation sequence extremely well, especially the 618, 786, and 1.27 and 1.618 that I like to use. So that's what we're looking at here with the German Bund. Now, the next thing that I have is the I want to bring out the notes, because I want to show you the 10-year notes. They've been much weaker. Just give me 1 second here so I can put them in here. There we go. I'll get it right here and you'll be able to see it. There we go. This next one coming in is the 10-year note, and as you can see, we didn't even rally to the 382 retracement on the 10-year note. This is basically what we've been saying for months now, is the fact that the interest rates are going higher. Yellen has already told us that interest rates are going higher. It's not going to be a surprise anymore, so they might as well do it. I mean, and with the markets as strong as it is, it could handle it. It really could. because people will want to buy it. I mean, why not? It just broke out into new high ground, but I'm sure the market's going to be able to handle it, relatively easily. Now, my time's a little short here because we have Bill Meridian coming on pretty soon. So I wanted to mention about the Chinese market. Everything appears to be okay now. All those problems are solved, they're telling us. So I guess we should listen to what they're saying to us. The FXI still has not rallied back to that trend line that it broke out of, up around the 44 level. It's trading now at around 42.60. China was weak last night, and then when the referendum came out with Greece moved the whole world, and it was, I don't know how much it was, but it was a lot of money, and it moved the market up on the day to be up about 0.5%. But frankly, I don't believe that these folks are telling us everything about what's going on over there, and the fact that they've closed over half the stocks, that's not a good thing either, folks. That's not the sign of a capital market. So there are things that you have to take into account when you're trading, the Chinese market. So the Hang Seng has bounced back a little bit. Now that's a freely traded market, and that's had a very, very quiet 3-day bounce. Also after losing quite a bit. So we're still the leader of the pack here. We're of course right near new highs, whereas the German DAX is at the 61% retracement of the move from April, and the FTSE is much lower than that, which the FTSE is the UK market. So those are just longer term things that I don't think we're out of the woods here. That's just my guess of what I'm looking at here, but we'll have to just wait and see, what's going to happen. But interest rates are going higher. If you haven't got your mortgage yet, you should, because rates will be going higher. And she basically told what you want to do. Now, she also said that it was none of their business what the Fed was doing, which I thought was pretty funny, but that's neither here nor there. So we'll watch that. Now, one other guest I'm trying to have on, I'm trying to get Rick LaRusso on. Rick used to be the head technical analyst for Morgan Stanley for many, many years. And I'm trying to get him on because his specialty is precious metals, and he's looking for a major bottom here in gold and silver. And he happens to be a client and a good friend of Rich Anderson. And Rich apologizes for not being able to be on yesterday, but he was very, very busy. And he was also very, very busy today. I spoke to him early this morning, and he told me that the heat maps for corn are as bad as they've ever been. In other words, if you look at it from a satellite, instead of looking green with the chlorophyll, it looks yellow. And he said this is not a good sign. We had a 20-cent break in corn. We're now back to the 61% retracement of that break. But the overall picture still looks a little bit negative. So we'll need to follow that on a day-by-day basis. So these are some of the things that we want to keep in mind here today. We'll be starting the big buying program here in stocks in just a few minutes, and then we'll see what happens from that level. But those are the main things I wanted to cover today: the euro, the bonds, the gold, the silver, the overall stock market. The overall stock market to me, folks, is that New York Stock Exchange Index. That's all the issues. The advanced decline line still does not show that there's a lot of buying coming in. Even with that big move we had last week when the market exploded to the upside with 10-to-1 advanced declines, we've given almost all that back, and we're back into the normal of more declining issues than advancing issues. But maybe it's different this time. We'll wait and see. We'll have Bill Meridian of Cycles Research on right after the break. 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, Bill, are you on the line?
I sure am, Larry.
Hi, this is Bill Meridian from Vienna, Austria. And Bill, I've got your first chart up. I've got them all ready this time, I hope. Anyway, okay. The first one we're looking at is the 2015 projection of the 1, 4, and 10-year cycles. You want to tell the folks what you're looking at here?
Well, actually, that's not the first one, but I can tell you when I can look at the first. The first one is a Word document, but we can get to that last if you want to.
Okay. Let's just do them one at a time because this is the way I've got. So make it easy for the old man, okay?
Sure. Okay. Well, my first take, and anybody who wants to forecast the stock market, is take the 1-year cycle, the 4-year cycle, and the 10-year cycle and add them all together. The one-year cycle, I read the Financial Analyst Journal, and most of you don't. I read all the quantitative studies. The one-year cycle has been validated. The four-year cycle is what they call the election year cycle, and actually the Rothschilds, way back a long time ago, someone said in an article in 1956 in Barron's that they measured it to be 3.84 years. That cycle is linked to the election process. But as my old pal Ian Notley pointed out in an unpublished work on cycles, that there is a four-year cycle in countries where they have a four-year election cycle, a six-year election cycle, an eight-year election cycle, or no elections at all. In other words, there's a four-year cycle. And the 10-year cycle is that from Ameritrust Bank, and I forgot the chap's name now, the decennial pattern of Edgar Lawrence Smith. And so we put the three together, but on the bottom we add them together, where I have composite of all three cycles. You can see it called for a pullback in the second half of June, then a rally from late June, it was actually early July, up into mid-July, which is where we are now. Now, I have projected turning points, which is simply day counts and week counts and month counts from prior highs and lows, which I first learned from my neighbor in Greenwich Village, George Lindsay, back in the 70s.
Oh, the three peaks in a domed house dude.
That's George. I could,
yeah.
The whole show I could fill the whole show with tales of George.
I'm sure
anyway,
we will have to do that because people have an interest in him. They would love to do that, Bill.
In the second half, you'll notice the second half of July, the line pulls back. So I am taking short-term trades off the table on Friday's close. I don't know if I'm going to go short because I don't think the market's going to pull back that much. If I do, it would be a small position because, as you were saying, I was listening to your comments, Larry. I agree the overall trend is bullish. And then it shows a strong August, but then it shows the typical first week in December decline down into October. I think that's the only period that I'm really concerned about. So if you want to get into market forecasting, the first thing you should study is the combination of the 1-4 and the 10-year cycle. So
okay, now we can just give me 1 second here.
Sure.
Oh, what did I do wrong now? Oh, here it is. Good. I'm ready to put up your Word document that you were interested in.
Oh, okay.
Let's start out with, I think we got that in here about the link between economic activity and sunspots.
Oh, well, this is not the first of these articles, but let me summarize by saying a Dutch researcher sees that his first name is C-E-E-S, J, middle initial, Prins, P-R-I-N-S, wrote Solar Activity in Economic Recessions, the Case for the U.S. This appeared in 2012 in the Global Conference on Business and Financial Proceedings, Volume 7, Number 2, if you want to look it up. And I'm going to quote, let me just briefly tell you what he did. He took the one indicator we know works 100% of the time, an inverted yield curve. In other words, short-term yields exceed long-term yields. That's been followed by a recession 100% of the time. So that was his benchmark, so to speak. Then he threw in all the usual variables one uses, which I'll enumerate in a minute, to forecast the economy. But then he threw in the sunspot level. And so here he says the probability of a recession taking place depends on many variables. And he mentions the inverted yield curve. Also, stock prices can give valuable information with predictive power. Solar activity is measured by the number of sunspots, also adds to the explanation of the probability of a recession. In the three models that are estimated for 6 time periods, the number of sunspots is always very significant. The sun has direct and indirect influence on the economy. And then he sort of concludes here, it is clear that the model has one interesting and significant long-term variable, the number of sunspots. The number of sunspots as an indication of the activity of the sun appeared to be a highly significant variable in explanation of a recession during all periods investigated. And let me just add, he looked at only inverted yield curves with a batting average of 100% exceeded solar activity. And this answers the question of why when we had meetings in the old days and the guys going on and on about all these variables related to the economy, the only time I listened was when he talked about inverted yield curves. Most of these things just don't work.
Mm-hmm. Bill, we have a question from one of our listeners, and they ask about when you start to do these cycles, which years do you start with to do these cycles, the 1, 5, and...
I started in 1885.
1885, this is the year after I was born. Boy, that's a long time ago. Okay. Now, which chart would you like to go to next? I've got them all up here, so I can do the one that you like.
Airline sign distribution.
You got it. Let me get that
Now,
right here, and there it's right here, and I'll put it into the room here, and you're free to go. Go ahead.
I'll start at the beginning so everybody understands. Everyone knows group stocks are accumulated into groups and sectors, or 10 sectors, and there are numerous groups. And when I was at Value Line, I started accumulating the horoscopes of incorporation at first, and later horoscopes of first trade when they first were listed on the exchange for all the companies that I was following. And over the years, I started to take first trade charts, the stocks related most directly to the share price, and put them in like groups. And what you see right here is the distribution of the planets. That's all the planets, Moon through Pluto, plus the North Node, plus the Midheaven and Ascendant. And I ran when we got software. In other words, I was doing this before we got the software. What you see here is now simple. You press buttons. And Gemini and Sagittarius are by far and away have the most planets, angles, and north nodes in all of those stock horoscopes that comprise the U.S. airline group. Now, I first did this way back around 1982 or 3, and you remember those were the days of TWA, and if you remember Eastern Airlines.
Yeah, that Carl Icahn, I remember. That's when it was one of his first deals.
Sure. People's Express. Well, they're all gone, and the sign distribution that you see here is for the modern day airlines. It is exactly identical to the one I calculated back in the 1980s, despite the fact that there have been so many changes within the group itself. So the first thing you do is you put the stocks in a group. The second thing is you run all sorts of distributions like this. And next thing, if we can switch to the next page.
This is the one with the Saturn.
The price chart.
Group. Yeah, okay. Yes, you got it.
When the next thing you do to validate what you're doing, you say to yourself, well, if there were that many planets and angles in that group, what happened when planets sailed through there the last time? And if you see sharp price reactions, you know you're on the right path. So when Jupiter went into Gemini, which was a while ago, this group literally took off. And what happened on the 1st was that Saturn entered Sagittarius January, and note that the whole group is down. Now that I've told you, I should have told you the fourth quarter of last year, and this is from an online presentation that I did. I forecasted it at that time. Well, Saturn is going to stay in Sagittarius, we know, for about two more years. So if you're expecting the airline group to recover right away, I would say no. I think they're in a bear market all of their own. So if we can move forward one, I'll show you some upcoming group moves.
And which one is this software group?
Software group. That is the first trade chart for Microsoft. What I like about the modern stocks is there's no question about the dates. Microsoft was not originally Uncle Harry's, horse liniment invented in a barn in Ohio in 1880, and you're not sure what the history is. Microsoft started trading on March 13th, 1986. And you'll notice right at the top of the chart, it says 11 Aquarius, 58. That's the midheaven, very important. And the sun is about 23 Pisces. Now let's move to the next slide and look at the big three software group. In the middle, we have Microsoft. In the second ring, we have Oracle. And in the third, we have Intuit. In all three of these charts, Larry, the midheaven is 11 or 12 Aquarius, and the sun is 22 to 23 Pisces. I can't say it any more clearly that birds of a feather flock together and stocks of a feather trade together. So whenever you get a hit to one of these in the midheaven of the sun, it's all three. So that's why the whole group moves together. Now, if we could move forward, we're going to jump now to the technology group. This is IBM.
Where is that one?
That should be right after software, the big three.
Oh, I see it right here. Yeah, the one that says IBM.
The one that says IBM is the one that has IBM on it. Yeah.
Oh, very good. See you.
Hey, listen, on the open mic at Payne Weber in the late 80s, some guy says, can anybody tell me the ticker symbol for IBM? True story.
Wouldn't surprise me.
You'll notice that the moon is 14 Gemini, Uranus is 16 Pisces, and Mars and Jupiter are 16 Sagittarius. Those are all mutable signs. This runs throughout the big old technology stocks, and you'll see it if you go to the next one, which is Central Decadent of Mutable Signs - Technology.
Okay.
Do you have that one?
I've got it ready. I
You'll
worked on
notice-
this. I worked all morning to get this right, Bill.
Okay, you'll know the middle is IBM. The center chart is IBM. The middle wheel is Lexmark, LXK, and the outer one is Computer Associates, I think now known as CA Incorporated. And I have a circle drawn around all those planets in Sagittarius. And if you look around the chart, you'll notice planets in Pisces, some in Gemini, and some in Virgo. In other words, the central decade of mutable signs, which means Gemini, that's 10 to 20 Gemini, 10 to 20 Virgo, 10 to 20 Sagittarius, and 10 to 20 Pisces, is where most of the planets are in the first trade charts of these big old line technology companies that make up the S&P Technology Index. Now, if you flip to the next slide, which is Saturn-Pluto opposition in 2001, sent the sector down. Do you see where I have the line Saturn, Gemini? Saturn was in Gemini, opposite to Pluto. So not only did you have a malefic Saturn in Gemini, you had a malefic Pluto in Sagittarius, and they were 180 degrees apart, and there were eclipses. And that's one of the reasons, Larry, I exited my position as the technology fund manager and joined the external management, the external managers, because I didn't want to be holding on to this thing. Mm-hmm. And it was actually went deeper than I thought it would go. And then you'll notice 0708, Saturn in Virgo, and what happened? Down you went again. Now, Saturn has entered Sagittarius. Let me explain. I don't want to get too complex. It entered, and it backed out, and now it's going to enter again this autumn. So that is a negative beginning, I would say, in 2016 for this whole group. So January of 16, I would be out of this group before that time. But there's good news before we get there. I have watched the Jupiter-Pluto trine in the autumn of 2015. Coming up it's either October or November, the beneficial planets will be in these areas. So I'm predicting a very strong fourth quarter, especially for IBM. So October through up into January, sometime around the earnings reporting time, I think it'll be a leading sector, a very strong sector. And then I think they're going to get clobbered after January of 2016. So I just wanted to answer the question of how one can use horoscopes of first trade and planets to forecast movements of entire groups of stocks. And I've also done this for foreign countries. It works there too.
Mm-hmm. Okay, this is good. Now, if the folks want to reach you, it's Cycles Research. www.cyclesresearch.com. We've posted your website into the room, so folks should be able to see it without too much trouble.
BillMeridian.com.
Just BillMeridian.com, as good as anything.
That'll get you there. Or bill@cyclesresearch.com if you want to send an email, which you can do through the webpage anyway.
That's good. Well, listen, thanks for joining us today. We'll have you on in a few more weeks. How's that, Bill?
That will be great. Always looking forward to speaking to you, Larry.
You bet, buddy. Thanks a lot, and have a good day over there.
Thank you.
You bet. Bye-bye. Okay, folks, that was Bill Meridian of Cycles Research in Vienna, Austria, talking about the airline group, of course, and then also some of the computer stocks like Oracle and some of the others. So they have a little bit of a negative bias from what he's told us here. Especially the airline stocks are under, a really strong negative influence from where we are right now. Now, we have opened above the 61% retracement now in the New York Stock Exchange Index. We are, right now, we are trading at 1023, so that is 10 points above it, whether we're going to close there or not, because we left another gap up. So there's a chance here that we're going to, really break out into new high ground here and never look back. So we'll have to, give it a little bit of time here to see if this is going to be the case of, what's going on. We've got a little bit of movement up and down early this morning in the stock, so it's kind of early, but we did gap right at the 618. We're going to take a little break here. We'll be right back after these few words.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, next I'm going to cover the VIX in just a minute, but I wanted to bring you up to date on the corn market. I posted a chart in here for September corn, which is pretty much what cash corn is doing. As you can see from this long-term chart here that we've had some equal moves. We just went up on Monday. We hit the 61% retracement. We backed off 22 cents. And as you can see, we've taken back more than 61% of that already in a few days. So that's telling us that we're almost ready to break out here in corn. There's certainly a possibility of that. and we want to watch that. As I mentioned earlier, Rich Anderson of Anderson Capital Management spoke with me this morning and said that the crop is looking, closer to 160 bushels per acre, which is, boy, we get that. We got big problems, folks. You're going to be looking at corn $1 a bushel higher, because that's where it was the last time we had a crop that size. So be really careful here in these markets, because we're still in a weather market in corn, and we're starting one now from July 15th to the 20th of August in beans, because that's when they start to tassel. Now, the next chart that I wanted to post in here, of course, is the VIX index chart, and as you can see, we've had these gap downs. We gapped down again today. We basically were almost near new lows here. We've got virtually everybody, looking at the long side of the market, as they should, because it's been going up. But the New York Stock Exchange Index, even though we're a little above the 618, today's close will be very, very important, because of the importance of this cycle that we're over with the new moon today and these other cycles that occurred yesterday. The things changed so much just on the Greece thing, and now China is got all their problems fixed and everything. And if you believe that, I still have 2 shares of the Brooklyn Bridge for sale. They're going fast, so be sure to give me a call, if you get a chance here. So the close today is going to be extremely important here. The early morning, of course, we went down, and then we rallied right back up again, just like we always have, because the shorts are frankly scared to death, as they should be. So we'll be watching it very, very closely here to see what's going on over the next tomorrow's show. But we will have Rich on. I'm going to try to get him on tomorrow if possible. And if whatever we can, we certainly will do that. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.